call out the things that I see in the market profile so you guys can start developing that sense while you're trading, right? I mean, understanding the market profile post the date is also important because you use that for analysis. But market profile is really intended to be used while you're trading because the market is generating some information and it will help you guys make some decisions. And as you guys have seen, when I trade live, there are certain levels that hit better than others and are respected better than others. And they have a better risk reward when you're trading. And if you guys are not noticing that during the live sessions, I mean, just say something and I can call them out. But I really try to, call out the single prints, the poor lows or A and B poor lows. When we had the crowded poor lows at the 42, 45 level recently, I called that out. So don't think, taking this PowerPoint and this class is going to make you a better trader. It's more about how you understand it. And then the most important piece is how do you apply it, right? It's not going to come to you overnight where it's like, oh, I took this class and I didn't become profitable. If that's your expectation, I suggest you just kind of close this and cancel the Discord membership because that's not how it works, right? I cannot make you a better trader and give you a lifetime of opportunity for earning money in a month. And I don't think there's a person that can do that. And what you're going to struggle with the most is not really the technical side of these things. Once you understand the technical side of the, let's say, market and volume profile, the problem becomes you. How do you fight your inner self? And that's going to be the hardest thing that happens, right? And it's going to be through the losses that you're going to realize who you are. And then through the persistence, you're going to figure out if you're going to make it or not. And I'm not saying that all of you will fail in trading, but there's a high percentage of failure in trading because you're relying only on who to be profitable. It's only yourself, right? There's no, this guy said this girl said that. None of that matters. You're the one clicking the buttons. You're responsible for it. At the end of the day, it really becomes down to the mental side. If you guys noticed, maybe in the past 3 months, what I've done when I'm trading live and I'm done, what do? I log off. Before I would stay and I would hurt my profits trading with you guys, which is not a norm for me. I can be alone and trade alone and not have anyone, not have a Discord, not do any of this. But it helps to build some rules around yourself. And this is not a rule that Shorty's like, oh man, I made profits. I just want to buy time. My goal in life is to buy time. And once you really understand the purpose why you're trading, it becomes a lot easier on a mental side to handle. If I make $1,200-$1,500 in a day, and that was a trade that I waited for and executed, I think Friday we had a perfect trade short on. And what did I do? I logged off, came back, I played super small size. And I just, took losses of 70 and added gains of 150, 200, sometimes 100 a few times. There's going to be a time where you're going to struggle as a trader, but that's the piece that's going to matter the most. Because once you get through that muddy period of figuring out stop losses, aggravation, then it's going to come a period of good times. But what really is going to make you a good trader is how did you prepare for the bad times when you had the good times? And don't confuse this. This is applicable for the rest of your life. And a lot of people fail to do that, right? And even in economy, a lot of people that had really, really good jobs, what did they do most of the time? When they make a lot of money, what did they do?
Spend more.
Spend more.
And then buy a big SUV.
And then the bad times come and they're like, oh shit, man, I have to make that payment for the Yukon, $1,800. But the Yukon is not producing money. So that's where a lot of you guys are also, I would say, struggling. A lot of you became profitable and are transitioning to more consistency. If you had to pick perfection or consistency in trading, pick consistency. And that's just my advice to you guys. Perfecting that 0.25 entry, sure, is good enough. But being consistently finding the same setups over and over, whether you hit a perfect entry or not, doesn't matter. In your trade log, it's not going to say I perfectly executed this. There was minimal drawdown. You're gonna have those trades, but your goal is not to have a perfect trade, minimal drawdowns. You also have to have losses, and how you manage those losses and how you preserve it is more important. With market profile itself, this is not a trading indicator. A lot of people that I see that are picking up market profile, this is not necessarily an indicator that tells you a buy or sell. It gives you enough information about the market, what's happening in the auction, for you to realize, is this bullish or bearish? Are people trapped long or short? What is happening? And then, as a human, you take all those pieces and you have to make a quick decision, because the opportunity side of the thing sometimes is there split seconds, right? You guys see it. We hit a level and we bounce off and we go off, and then you don't have an entry for the rest of the day. And most people, if you don't get those entries, you walk away, and then the next day comes in and maybe you find another play that's there. So with that being said, kind of let's look into the market, right? So just like any market auction, guys, and I'm talking about any, and we've talked about this, but this is more for newer folks. Market is just a two-way auction process. Well, what's valuable to one person might not be valuable to another. Your job as a trader is to find probable setups within these shifts, whether it's in a bracketed market or if it's in a trending market. You're basically competing against every other trader, because it is a zero-sum game, right? For me to make money, somebody's got to lose money, and vice versa, right? And then you have the dealers in between, the locals, if you want to call them, the market makers, that are just collecting fees based on transactions. So they like you trading in balance, right? Because their risk is also minimized. When you think about the theory, right, of auction, right, and we've done this before. If there's a product that you're wanting to get, right, and eBay did this really, really good way back. I'm talking about 20 years back, if you guys recall, when it kind of became hot. You can put an item on eBay to sell it, and then people bid, right? And when the auction is coming to a close, what do you notice on the product that's being up for auction? There's a lot of bids, a lot of stuff's happening right before the auction ends. And it's a similar concept in the stock market, right? Time just regulates the opportunity, right? Not only is it 9:30 to 4, but also, at the time, at the level that it's coming, you have a limited opportunity to snatch that trade or level to go long or short, right? So the purpose of the market is to find the person that's willing to bid the most and match it with the person that's asking the lowest offer. And I'm sure you guys actually exercise this concept daily, but you just might not think about it as much, because it really happens in the stock market a lot. And that's how it functions. It would not function any other way if it wasn't for the market auction. Buy and sell. And the only thing we can notice in the market is, are they aggressive buyers? Are they aggressive sellers? Or are they passive buyers and sellers just kind of trading away on the long-term ranges, right? The key component that a lot of people fail in how they trade is they treat balanced and imbalanced markets the same way, and they trade them the same way. And that's not necessarily the best method to do. When you're in a balanced market, that means that we're prepping for a move, and the longer the balance or bracketed market, the more impulsive the move will be, whether it's markup or markdown. That's dependent where on the price and the discovery. The last bullet is, and I think a lot of people that have been in this Discord, is once you start thinking about price, and this is the only way I think of price, is price being accepted here or rejected? And once you start asking yourself that question, it will make sense more when you combine the value of trading, right? The value of the profiles of the days, weeks, months. And you look at the month to month, and the price was rejected, let's say out of April value, and it's seeking higher in May. Well, then there's directional performance. You want to track and see, how did it get there? Did it get there on more volume? Did it get there on less volume? What is the value area width, placement, right? All those things would matter, but price can only be accepted or rejected, and it happens literally every freaking day. I mean, we look at daily profiles day to day to see how's the price being shifted because most of us are intraday traders on futures, right? If you're a long-term trader, you're going to be using different time frames, whether it's weekly or monthly. But the purpose, what I'm trying to say, is that the value is applicable to any time frame, and auction is the one that drives it, right? If I'm auctioning like we've done before, I'm going to auction my PC. I'm not going to tell you anything about it. Who wants to bid on it? You're bidding blind on a PC. Somebody's going to throw a number out, and then I'll add more details, and let's see how it
I'll give you
changes.
$3.50 for it. $3.50.
Sure. I have an i9 with two 4090 Ti NVIDIA graphic cards.
I'll give you $1 grand.
I'd give you more than that. 1.1.
And it's liquid cooled.
1.25.
1.3.
With 120 gigabytes of RAM.
Yeah, I'll give
What did you build? A NASA computer?
$1,800. But I want you to pay for shipping.
So for people that value the PC and that understand what I'm telling them, it might be perceived 1,800 is cheap. If you don't know what you're buying, right, on the vehicle or investment that you're buying, you might not perceive it the same way. So what's expensive to one person, let's say $1,800 for a PC, true, right? It is expensive for a day-to-day person to buy $1,800 PC. But if this PC is able to generate 20 grand a month, that PC is just a drop in a bucket. And especially when you're trading and you're doing stuff on the PC, it might bring more value than what you think. So when you look at the stock market, right, there's other time frame participants that when we're at the, let's say, daily value area high at the top of the value. So for a short-term trader, what would that indicate? Hey, I need to close this, right? We're above value, we're trading at the value, we're not making higher highs. I'm just going to close this. And then all of a sudden, you get this initiative buyer spike, and then they go higher. Well, that would be the break of that value. And it's usually the breaks of the values, right? Especially the extremes are most of the time initiated by big boys. You usually have emotional short-term traders or big boys participating in that auction that's able to shift that, right? The extreme, whether it's lower or higher. Okay. When you think about the last bullet that I mentioned, the price being, accepted or rejected, this is kind of the model that I want you guys to picture, right? We are in balance, and markets spend a lot of time in balance. So when they go out of the imbalance, you're watching to see if that imbalance is being accepted here. We obviously created value here, right? So if you think about it, this was the value that was built right here, and they traded happily in there, right? The dealers were accepting this because they, a lot making profits there and a lot of transactions. Now you have a markup, right? Imbalance, it's being marked up to the upside, and then they trade it, right? And let's say they hit some resistance and they are coming back to this level here. There's two scenarios that can happen, right? You want to see the buyers come in here and defend this, which would mean we are accepting the prices above, meaning we want to trade here, not necessarily here, okay? It's important to notice that, especially after trend days, when you guys have, remember how we had like a couple of P-shapes in a row here, but we haven't really cracked below the HVN of the P-shapes, high volume nodes of them. We're staying here and we're building value. We're not cracking lower or rejecting it. We're just consolidating a little bit to make sure for the next move, okay? That would be from balance to imbalance, and you're looking to see if the price is going to be accepted here. Failure to do that, that would be the rejection, and most of the time, if you fail here, you're going to auction to the bottom of the opposite extreme of that value, because the buyers are not finding value here. Where do they want to seek? Well, they're going to seek value below the last range, meaning we want to dip, then regain it, and that would be our long, because a seller wants to be a seller above value and a buyer wants to be buyer below the value if you want to make money in the market, right? Our job as a trader is to go on the multi-time frames, right? Look at the daily, look at the weekly, and look at the monthly and see what do we have at these levels, right? Is there any levels that are, let's say a weekly value area low and a monthly value area higher here, right? That's not a level that you want to be trading inside too much because it's going to be choppy, right? There are going to be a lot of fights. But once they're above and they give you a nice retest, that becomes a long level. And then once you're below, it looks like a nice short level. You're trying to go with the trend, not necessarily fight it all the time. If a trend here and understanding the balance, let's say we're consolidating, you pop higher and you're still making higher lows here and you're coming in for this is a pretty good long. And in the current market, do you guys know what level this is? We talked about it just not too long ago. I had it marked as a very important level on our chart.
A 3-day balance.
Do you guys remember what that was?
Prior day balance.
49.
49, right? 49 was the level that was sitting there. So now if you want to go look in a chart and look
Yeah,
up
it's on it
49,
right now.
and this was the level. I'm looking to find buyers, and then if you kind of look at the candles, you'll see that we bounced there already. And obviously we're closing above it, so they're indicating they did not want to go below. They're saying, hey, the value needs to be higher. We're not interested in selling here. And that's fine. If that's the case, then we're just going to have to look for new buyers and they're going to auction. So that would mean the price is being accepted higher and rejection on the bottom side. And then the same is true if you do get rejected. You want to pay attention to that as well. And then you're starting to look for, what is the next value? If this is our range low, we're headed here. Once you reject this, then you're looking to see, do we dip and reclaim? Because that's big, right? That means if you're going above, let's say like here, what I would pay attention to on market profile is, do we have any access at the top, right? Sometimes when you have a crowded poor high, let's say in this case, do you guys know what would that indicate? So you're trading in the balance like this, and then your price action looks like this. Do you guys know what this means when you say crowded poor high?
Buyers?
Wrapped.
Other time frame defending the level?
Okay, anyone else?
Is it a test above or trapped buyers?
Ah, that's an interesting concept. So think about this. Short-term traders, right? When you have a poor high, it just means that somebody initiated some transactions at a poor location and that we did not finish that auction at the top properly. We did not get a single winner on an eBay product item. We're still fighting. We're still going on. What they like to do when you have a crowded poor high from here is they like to go lower. Why would they want to go lower from a poor high?
No
Just
initiation.
unfinished.
To find some definitive buyers.
Okay, tell me more. Give me a little bit more beef on that. A little bit more details. So you have a price that's sitting here. Why would somebody want to go auction lower first?
See if the buyers really want to step in.
Find more buyers so they can break through the top.
Get liquidity.
There's potentially, remember, poor highs and poor lows are usually initiated by short-term traders. Keep that in mind. So if the short-term traders are buying here, what does that mean? Inventory is long?
Yeah.
That would mean that I'm hoping and so I'm speculating that the market's going to go higher, so I bought it. I bought it here at the top, right? And let's say this leaves a poor high here, but we auction lower. Why would they do that?
The stop losses.
Get you out of the trade.
So think about inventory. If this inventory is plus 100 here, plus 100 long, right? How would I deliver the pain to these people?
Go lower.
Drop the price, sell everything.
Yeah, you want to stop it, right? So how can you guys think of this example anywhere in the, like, let's say, have you guys ever seen the CarMax dealerships, like physically?
Yes. Yeah.
Okay. If you go back, and I don't know if it, if you have time, just drive by them, take a picture of them, and then, if you took a picture of it 2021 and you take a picture of that same lot now, there's a difference. So when, let's say this, when CarMax has a lot of inventory on their lots, let's say they have 2,000 cars at their lots in 2020. What do they have to do to get rid of this?
Drop the price.
They have to drop the price so they can get rid of the inventory because they bought the inventory. They're sitting on it, but it's not making higher prices. If I can't sell that Yukon for 115,000 and I have 100 of them, what do I have to do to Yukon?
125.
Down to Shorty's
Find the
price.
buyers.
Yeah, you have to lower the price. So typically when you have a crowded poor highs or poor lows, and you guys will hear me sometimes say the market's too short. That's equivalent to a crowded poor low. Because when we're trading here and you dip below and you reclaim it, ooh, that means all these suckers here, they got trapped on the short side. It's a poor location to initiate a trade on the short side, right? What is your risk? Now you're betting on a price discovery that you're an initiative seller.
You're
And
gambling.
typically you're going to get screwed. And that's why a lot of traders fail, because they take trades at poor locations, because they follow the masses. But they follow the wrong masses. They follow the masses of people that either get in late, right? Or somebody said, like, the GME fiasco that's happening. I mean, eventually, you don't think this guy's going to close by June 21st? Any of the calls? Come on. He's a smart guy. What he's doing is a very, very smart game, right? He's definitely not stupid. He knows what he's doing. And it's the same in the stock market. When we are going high, poor lows, poor highs are created. Typically, we want an inventory rebalance. And you guys hear me say that, and we'll cover the concept here specifically on a slide. When inventory is net long, we had it happen not too long ago when KJ was saying that most likely we'll drop to that level, and we definitely dropped to the level. They took the net long inventory and they made them close it. Once they closed it, they're like, okay, well, we're in equilibrium, we're at zero, now we go, right? And I would say the hedge funds themselves, they have to hedge them, right? They have to protect their longs and shorts. But is there a scenario where the hedge funds are not, too long or too short? Yeah, there's definitely. I mean, you wouldn't have, otherwise all the hedge funds would be profitable. You would never have a bankruptcy. And just go back in 2008 and let me know how that worked. Right? You had mortgage-backed securities that were clubbed together and a lot of them failed. Right? So hedge funds were buying these and the risk was there and they were over leveraged. And then, when the cash flow stops coming in, people can't make payments because those people bought the prices at the highs. And the good times, you didn't plan for the bad times. What happens? Well, you get a little bit of an inventory rebalance, meaning the inventory was taken by occupants in the houses. Now they're going to go through the bankruptcies. And what happens to the inventory?
It gets sold.
Inventory is available, but inventory is going to be available at lower prices. And those occupants that got kicked out of the houses here, can they buy the house now here? No, because the bankruptcy prohibits them from buying because they don't have credit. So who buys the bottom?
Thanks.
The banks. And
The hedge funds.
then the banks drive the price here. By the time you're out of your bankruptcy, I don't know how long it takes. Where do you buy the house?
Right back
Right,
at the
they
high.
want to sell it to you.
Right back at the highs, and the cycle repeats. So as a trader, this cycle repeats a lot. Sometimes when you're in a bracketed market, I think last week we had one day where we said buy the bottom, short the tops. It was a shit day, but it offered that, right? Where we were buying the bottom, selling the POC, and selling the tops. And that's a strategy in a bracketed market. You have a limited RR in bracketed markets. It's a little bit unlimited here, right? Because here you're looking for what? As you're auctioning higher, what are we looking for?
Initiated buyers, sellers.
We're looking for sellers, right?
Yeah.
We're trying to find where are they sitting so we can shut off the buying. And same opposite is true, right? When you're auctioning lower here, you're looking for what? You're looking for buyers to shut off the selling. So it's a really easy concept, but a lot of you guys forget it when you get in a moment of trading because it's almost like you freeze. So I think we covered this, right? Fair or bracketed market just means a balanced or consolidating market if you're new, and it means that there's value there, that they're happy trading there. There's no, preference who's more aggressive. There's the short-term traders are just happy to take shorts at the top, buy the bottom or below value and reclaims. While in a trending market, we don't agree on the price. When you have a bracketed market like this, and then you go rocket out of it, well, you're no longer agreeing on this, and then there's participation to go higher, and then your job is to find where's the entry or where the last accumulation of buyers, and see if we can kind of auction back to that level and go long, right? Well, different mindset for the different markets. Can you guys understand that, or is it too much?
Shorty, can I ask you a question?
Mm-hmm.
When you're talking about trending market and the breakout initiative buyers or sellers, do you ever take the trade with them, or do you
No.
wait for a retest?
I don't take trades with them.
Okay, so
I wait for the retest.
always the retest.
Scalping for, if I'm scalping for $100, $200, I will take sometimes a trade if I'm on live and trading. I will take that trade, but my stop losses are fairly tight. Because if it's going to work out on a momentum breakout, I want it to work out immediately. I don't want to give them too much time, because typically what they like to do is on these momentum traders, they spike it. And as you get in, usually they trigger a stop run, right? Meaning they grab your money and then they go in the opposite direction. So what I like to do is, especially if it's a key zone, key level that we are having, let's say this was the zone, I can't go long here, right? They need to come in here and accept the price higher. Then they come back, then we are looking for long from here. And it's less stressful trade to go long here than it is for me to go long here. The anxiety level is much different for me. As here you're getting in and you're freaking out. Where are we going to go? Are we going to reject? Well, here you already accepted the value a little bit higher than the previous. So now when you come in, I'm going to have a lot more participants defending this level. Even these boys that bought it here, they're going to be buying here. So you have a little bit of a higher probability working on, I would say, on the retest rather than the breakouts. I'm not saying you can't, right? But you have to use a little bit more confluence items when you're trading momentum, right? You really have to look at the tape as that's happening live, just to see what type of behavior are we getting in the market. Are we getting aggressive, passive? Is the ask being, shifted nicely? Is the bid dropping, or is the ask dropping? Those things matter, and you want to know the size, the volume. Like, are we buying as we're going higher with volume on this momentum breakout? Or are these buyers just, we're auctioning higher, but we're looking for a seller, and we're setting up for a sell, right? Those are the concepts that trigger in my head to look at immediately if I'm trading the momentum, right? Look at the tape, see what's happening. Do I have any key support around it? Sure, I can take it, but I'm typically cautious about playing, I would say, the breakouts. Okay. This is, if I was any slide that I would print for you guys and have it next to my PC, it would be this slide. It would be understanding what the value is and where you want to be participating as a short-term trader, right? A lot of short-term traders, they trade inside the value, right? We trade inside here, and we, peak above, lose, you're here, lose this, peak inside, you're long here. A lot of times, and I would say 99% of the time, we do not have necessarily capital to sit at a level. Let's say this is 100 level, and this right here is 75 level, and the price comes here. We do not have the size to initiate this 75 here, let's say an order block, to drive it back up. So we are relying on other time frame participants to do that, which would indicate that they're here, and then we can look for a long off of this value, because most likely short-term traders will drive this to the, the opposite extreme, and that's where you're looking to close your targets or trades. So selling above, the value is a responsive. It's basically what what you're expecting to happen. When you go above value, you're looking for sellers. Is buying expected above value?
No.
No,
Although
right?
they will try to trap buyers.
Exactly, right? So they can definitely trap you above value, but you're not looking to buy above value. And there's, again, a difference if you're trending or if you're in a balance. You do not want to be buying in a balanced market above value. If you're trending higher, let's say we close the day above value area high, right here, and this is our value area high. And tomorrow we open here and you're coming back for this retest of the value area high, that's not a bad long to play, right? Especially if there was, let's say, some aggressive buyers that came in here on the initial break and you look at the footprints and this checks off, that becomes a great buy, right? Because now you're defending, you're trying to shift the value, just like the model I showed you guys earlier on the picture. But you had initiative buyers and now you're joining them back again, right? I was not participating here, but rather here. If you're buying below, I mean, that's expected. When you buy something below value, it's like, cars. Would you buy, I don't know, I'm not good at Mercedes. Let's say a Tesla. Tesla X drops into 25K tomorrow. How many of you would buy it?
I would.
There's probably a bunch of people that will buy up a Tesla, the X model, the SUV, at 25K. I think you would not have enough inventory at this level to go. So the responsive buying would occur, right? How many people would be willing to sell their Tesla that they bought at 50? How many of them would be willing to sell it at 25?
Probably none.
They're not.
I mean, it would be very stupid, right? Because first, if they have a loan, they would be upside down on that loan and they would still have to continue paying that 25K on the terms they agreed, and they would get the cash, right? But not going again to the transactional details, but somebody needs a title. Either a bank or a person, if he's paying cash, needs a title. But it's the same concept here. If I'm, let's say I'm shorting the market from here, right? I'm selling here. Well, I want to cover it where I know the buyers are expected, and buyers are expected here and below, right? So as soon as you come here, you're looking for some closure in a balanced markets, right? And I'll show you guys once we get to the examples how this worked. So getting into the market pro, any questions on the auction so far, the concepts of it?
Very clear.
Okay. So as you guys know, market profile is not an indicator. It's just basically a graphical representation of where was price and time. How much time did you spend at this price? If in the first 30 minutes, which is A period, you spend time at 1900, well, you're going to have a little period of block letter A at 1900. If the B period comes in and you're again at 1900, now you'll have A and B next to each other. If the C period is trading at 1900 for any period of time, they're going to tap level C there. So now you'll have A, B, C at that point. Let's say we don't like that level and we dipped 1600 and A and B were not there and C period is all the way there. So now you would have probably some, single prints in a C period because they extended that balance of A and B period. Hopefully you guys can visualize this as I'm speaking because we're about to get there. I would say, market profiles itself, the market changed a lot. So if you traded in 1900s or let's say 2000s, I don't know how some of you traded how long, but the market changed a lot from the participation in the market. It's much, much broader now. You have a global economy, I would say a worldwide economy. You have instruments that you can trade, shorting, long, swaps, FX, whatever the case is, but there's a lot more. And then you have the retail traders. Now you look at, I'm bringing up Hello Kitty as a really good example. One retail trader amassed $500 million from trading. That's pretty successful, right? I mean, you don't do that by accident, I would say. So a lot of retail participation is stepping in. And when you have a lot of retail participation, it takes a lot more how would I this? It takes a lot more to execute from the traps and making sure that you herd the sheep into one box and then you deliver the blows. You want to capture as much as you can. You need to create euphorias at the top, scare the people on the bottom. That's normal market behavior in terms of auction. And what market profile does is that you have to put all that aside and you look at what is it telling you, graphically what is happening. And there are certain concepts that we're going to go over that will help you digest that and kind of start recognizing these setups that you can see, so that way you can make sound decisions when you're trading. Please don't confuse this. This is not an indicator. It's just basically giving you opportunities based on the market generated information, as we call MGI, tell you what's really happening in the market. Okay. There's only 3 components to the market auction. There's only price, time, and volume. Price is the one that's basically used for discovery, and every good business, if you guys go back, even now, let's say if you live somewhere in South and you look up Chick-fil-A, like every other business, what did Chick-fil-A do to the prices recently?
Raise.
Raise them.
Yep. So I mean, I love Chick-fil-A. My family does. Their Chick-fil-A biscuits, we used to get them, and they used to be $2. The Chick-fil-A biscuit now, it's in my area, is about $5, close to $5. But not only did the price increase, the size of the chicken also got smaller.
Damn.
Right.
You still buy them?
I still buy them, right? So I still am a buyer at that level, but do I eat there as frequent as, let's say, I did when I was a younger teenager? No, for many factors, right? The reasons why, not necessarily the price, but I just don't eat there as much. But there's people that it doesn't matter. They're just going to eat that because it's tasty for the money they're getting. So that's the price. They use the price to maximize the profits. If the price of chicken biscuit is at $5, but their quantity demanded did not go down, what is that telling them about price? Is it being accepted or rejected?
Accepted.
It's being accepted, right?
Yep.
So there's no reason for Chick-fil-A to turn around and drop the price. They just want to make more. So the next step is to keep increasing that price of that product that you have till the quantity demanded and your revenue are going down. The time piece of that, it basically validates the price. Simple concept, like I mentioned, is that the limit of when you can trade 9:30 to 4. That's just a easy concept of framework of time. But the opportunity when you can buy that, right? What if Chick-fil-A comes out and says on Saturdays, or let's say on Thursdays between 9 and 9:30, we're going to have buy one, get one?
You'll be there.
Well, that would be a time constraint when you can get an opportunity to buy it. There was a
Right.
place in Atlanta, right, that sold burgers. And even now, they only sell burgers on Sunday, and they only sell 100 burgers on Sunday. I went once. I was like, man, I'm just going to get a burger Sunday. The line was like half a mile long. I was like, all right, well, I guess I'm not getting the burger because the opportunity, I was not there, right? And then the volume confirms the auction, right? So if the line for the 100 burgers volume was pretty sticky there, what does it tell you about the volume next Sunday? It's going to be there. It's going to be there again. And it's the same here, right? Volume confirms the auction, right? Just when you guys were, kidding around, I would not sell you my PC for $1,800.
Aww.
If there was a lot of interest at the auction at a level, that means the volume is confirming that auction, and especially if the price goes away from that level, right? If we go higher, that means that a lot of participants at that level seemed it fair, and then the auction higher, that they're participating in driving that price higher. They believe value is going to be higher. And POC itself, whether it's TPOC or volume POC, it just indicates equilibrium and a fair price. So typically you can go higher or lower from a fair price, and your extremes become the targets. And these 3 components are used to validate that. When you go higher, are you accepted? Time-wise, Did you get the opportunity? Did you get in the right sense? And not necessarily do you want to go at 350, you want to go all in on the stock market, right? If it's closing and it's Friday, for instance, you don't have a lot of time or opportunity. And then the volume, if you're auctioning higher and the volume is not there, can the market do that? Yeah, it can go higher with less volume, but it's telling you that at this time, it could be a short cover rally that's driving this, right? We're just buying on fumes while it's being sold to. Or, we're just going to go higher till we find massive sellers that are willing to drive the price down. So that's the three components. The basics of the market profile. Is this visible to all, this slide? Can you guys see it well?
Yeah.
Okay.
Yeah.
So this is important for newer folks. Most of the old, people that have been in the Discord, I would say, understand this, right? So each 30 minutes in a stock market is represented by a letter, right? So when you guys see the A, the B, the C letters, that means in that 30 minutes, right? A period 9:30 to 10. If the A period starts at, let's say, 1,000, right? And it's A and it goes to 900, what does that tell you about the A period? Well, the range was 100 points, went from 1,000 to 900, right? And you're going to have a bunch of letter A's in here. Now, if the B period comes in at, let's say, 10 and it opens right here, then, B is opening between that, whatever, let's say 995, and it's trading in the same levels here. If B extends letter A, right, and it goes above it, then they have an extension of a period. It's normal that this happens a lot, and you guys see it here, and this is a weekly profile. Especially when you notice the A and B period, right? So initial balance, this is important, is just your A plus B periods, which means this is your first 1 hour of trading. This is a very old concept, right? This is before any of, even market profile. There's something called opening range, which was, people used orbs as 30 minutes, right? But your initial balance for the market, and based on statistical and studies of it, usually when you have initial balance that's set and it's not broken, that leads to a typical day, right? When you have A and B set and you're extending prices higher and you're holding, let's say, above the initial balance high, most likely you get extended typical or a trend day, right? And the same is true for the opposite when you go below the IBL and such. So each period in this day, right, when you're in an RTH, you want to be on RTH when you're trading, each period is 30 minutes, and this is the period, I would call it schedule, that we are using. The end period is your settle price. That means at 4:15. You guys will see the end periods in TradingView. Some other platforms don't necessarily have it, but usually you don't count end period here for spikes or basically for any period, value or setups. You don't count the end period. You stop at the end. Okay. So are you guys okay understanding what it means to each letters? Because a lot of you, I got some messages about what they thought that letters meant. It was funny, actually. They're just basically indicating 30-minute increments where the price traded in that period between 9:30 and 10, 10:30, and so. Does that make sense to all? If you're new.
Yeah, so
Yeah.
IB
Yeah.
is AB.
IB is AB, correct.
Okay, thank you.
Yep. Midpoint, which is this point right here. Typically, I like to look at these on the weeklies. The weekly midpoints, or they're called halfbacks, is the 50% of the range of that week or that day. So you can have daily midpoints or weekly or monthly halfbacks. And basically what that means is that this is where the 50% of that day, week, whatever time frame you're on is sitting. So basically like a 50% fib of the high and low. The access, right, and this is unfair high. There's a lot of different names for this, right? Access means single print. So there's a selling tail right here. So when you have, if you look at these periods, you see how you have single, there's no TPOs next to it, right? There's only one. So if it looks like this, and this is all, let's say, TPOs, and then you have a bunch here, this happens to be a B-shaped profile, And these are all single prints. This means that this is a selling tail, that there's a lot of other time frame participants selling. You know, usually or typically you want more than 2 TPOs. So you want to have 2 periods to be considered access. And that's a minimal, right? That doesn't mean there's a lot of aggression. It just means that it is a selling tail and it wasn't a poor structure at the top, meaning poor high or poor low on the bottom, like you have here. So if you look here, you see how you have 3 periods that are next to each other in parallel? That means that it's a poor low, and poor low can happen at the top, which would mean poor high, or poor low on the bottom. Okay, so we just covered, you know, the access here, and the failed auction is the poor low. That's a different name for a failed auction. Anyone lost so far? Because this is your base knowledge.
Can a tail be any letter, or is usually
It can be any letter, right? You can have a tail show up at any letter, but usually if you have A and B tails, those tend to hold with higher probability than any other period.
Okay.
And any questions from new people here?
Can you explain again the poor low and poor high?
Yeah. So, and I have a specific slide for it, but here, whenever you have, let's say A and B start trading, right? A and B period. We had a lot of them here. So if this is A and B and A is trading, and then B comes on and it's like, okay, well, I'm going to auction to these levels, and they stop at the same exact levels, that means that that's a poor low. So if the C period's also here, and now you're reconfirming this is a crowded poor low, right? The more periods you have on the bottom without the tail or axis, whenever you have, let's say the D period comes in here and D period has a tail on the top, right? And the price is below, that means that this was a selling tail. And let's say F comes in, and we've had this happen a few times, and then the price goes in here, you know, now you have a buying tail on the bottom. Buying and selling tails only happen on top or the bottom. What happens in between is called single prints, and they usually create a division in value on a trend, on a double trend day. I mean, double distribution trend day. Does that make sense?
It does. What I don't understand is why it's called a poor low. I mean, is there a good low?
No, the good low is the axis. It's the buying tail, meaning
so-
the auction finished. The opposite of poor low is buying tail.
Got it. Okay, now it's clear.
The opposite of, you know, selling tail is what?
Is a poor high.
Poor high, correct. So
Okay.
whenever you don't have a poor low, you should find some excess, meaning that they push the price up and they created a little bit of a tail. I'll show you here shortly what that looks like. Then you get a high, which I think most of you guys should be familiar with, and value area low. What that means here is that in this area, 68% of the time the price spent here, or in volume was spent here. So this would be your VAH, value area high. This would be your value area low. And that's telling you, you know, when you think about the bell curve and distributions, the 68% of participation and transactions and time happened here. So if you know the 68% of the transactions happen here, for instance, and let's say we peak above, what is the probability that we're going to stay above?
Depends if you retest.
Well, it depends. But
17.
if we've spent a lot of time high here, most likely they're going to be
Oh,
brought brought back
Yeah.
in value, and you're going to
70% chance, right?
Yeah. So I mean, you have different setups, right? But usually we tend to stay, short-term traders like to trade in value. Other time frame participants, meaning the ones that come in at the extremes levels, they like to buy it at advantageous prices. So meaning when the price drops, let's say below the value, right? Remember on that slide, we said that you should print out. It's expected that you got buyers below the value. It's not expected to find sellers below value. Now your job is to distinguish which value are you talking about. Is it weekly, 3-week value that's being bracketed, or just a day-to-day? Those are, you know, dependent who you are as a trader and what you're looking for to get out of that trade that you're setting up for. Okay. Short-term traders, so that's your locals and, you know, us. And then you have long-term participants that come in, they buy and hold for a longer period of time, longer than 2 days. And they can be, as a access of months where they stay long and sell at certain points, right? Any questions so far on what we've covered? So initial balance, A and B period, midpoint is the halfback, meaning 50% of the day range or weekly, two type of participants, and then you have a failed auction, which is your poor low or poor high. And then you have a selling tail that occurs on the top, and then the buying tails that happen on the bottom.
The tail is another word for excess.
That's correct.
Excess,
Access.
right? Yeah.
And there are single prints at extremes. I don't want you guys to confuse it because we're about to get into it about the division of value in the double distributions, usually separated by single prints. Okay.
Very quick question. In a single print, is it safe to say that it's about time the price is going to reverse?
If you have a single print on the top or bottom?
Correct.
Yeah, so that it usually indicates that there's a reversal of the auction, means we completed the auction here, and price usually tends to go in the opposite direction in search of buyers. And same is true on the bottom when you have a buying tail. Other time frame participants come in, they defend the level, and then you're looking for an entry of such, whether POC or some other setup that we might have. Usually means the auction is ending, the new one's starting. Okay.
I got one question. Sorry.
Yep.
When you have a selling tail or a buying tail single prints, the market opens above or below, are the single prints established from the previous day considered invalid?
No, not necessarily. When they open, you're watching to see how do they behave when they get to that. So let's say we had a selling tail. Let's say we had a B shape here, and this was your tail was here. And let's say the next day, I don't know why, but let's say you opened here, right? Well, you're watching to see where that tail is to see if you auction below it. Even if this is your PDA,
support and resistance.
That's the beginning of the single print.
That would be your support resistance, correct?
But if it goes through, it
If
just
that goes
considered
through,
invalid.
it means that this was rejected. It means that we're gonna, this gap up was rejected. Most likely, you're gonna go at least to this POC of that V shape.
Gotcha. Okay.
Good question.
That top and bottom there are the single prints, correct?
So this would be single prints here, right?
Yeah.
And this would be a poor low. If this had a bunch of single prints.
No, the drawing that you did on the B, the B shape.
Yeah, this would be single prints here,
Yeah.
right? And this is just where the value, it's kind of like this. This is
Gotcha.
your single prints. This is your value. And then they're not interested here or here. They're interested here. Once they decide to go further from here, it just depends on the context of the market. For instance, let's say this is the setup that we have, and we have a poor low here. And if this is a crowded poor low, typically they like to rebalance the inventory, you look for a rejection, and then they're going to fix that poor low. Once they come to this poor low the second time, high probability that you're going to break this poor low and go lower. Okay.
When there's a poor side, they have to complete the auction eventually.
Eventually, they will fix it. That's repair, fix of poor highs and poor lows, but we'll cover it here. I like poor high, poor low setups when I'm trading. So there's a couple of setups that I trade for and I look for daily, weekly. I pay attention to the levels, and we have some setups that we're going to go through and kind of discuss it. And then your job, again, as a trader, is to spend time with the chart. If you really want this, you're going to have to spend some time looking and memorizing and creating images in yourself, and then really believing that you can do it. Because if you don't believe in yourself, pointless to learn anything, right? So double distribution, right? So this is not your single prints at the extremes where you have a buying and a selling tail. This is basically your mid, how do I say, confidence of an auction. You agreed on one value at the bottom, and then let's say you auction from it, and you have emotional buyers that come in, and then they drive the price higher, and then they consolidate at the top. So if you could picture what I'm telling you is you would have something like this, right? We agree on the price. We are accepting the
B-shape, right?
prices here. And then you have emotional buyers. They come in here, right? And then they auction back to this level, right? And now you have two values. And this looks like basically a B shape, right? It would look like a B shape double distribution. Usually double distribution days can become really, really hot once they, let's say here you have this, they give you a nice retest again on this single print, that becomes a buy zone, and usually they rocket from levels like this. And same is true for the bear side, right? When you're agreeing on the value on the top and you have sellers that come in aggressive, they go lower, those areas become really, really good retests of shorter longs on the SPs. So I think I covered basically this, where am I? This point right here. We had agreed on price at one level, and then we disagree if you auction away from it. Once you auction away from it, consolidating building value, which creates the second distribution. So the acceptance and the rejections of these distributions is what we are looking for. I typically like to play the retests. So let's say we are consolidating here, and this becomes your single print zone, and we go higher. I like to play the retests of these single prints here to go along. And I think we actually had one. I'm not sure if we had it Friday or one of the days. It was the 0725. Maybe it was Wednesday when we went from 0725 when I said overnight long. This looks very good. We targeted 25. I don't know if you guys recall, but the price, of course, went higher. But you know, it was a high probability you're going to bounce there. And then they came back the next day, not in the OVN session, but rather RTH. They hit the same level at 10:30. And then they proceeded to rocket from there. And we'll look to find it on.
Shorty, maybe I'm asking the wrong question, but does the single print play a role like, let's say, a skinny belly?
Yeah, that is the skinny belly. Yeah, so you consolidate at the top, you move out of this with imbalance, that leaves single prints, and then you create another value. So this
price is going to move real fast through that.
Yeah, the price moves, but you're waiting for the retest there to play that.
Gotcha.
You're playing with the retests.
Shorty, I've seen you mention OVN, like overnight, multiple times. How I guess, are you identifying a good OVN trade?
Same as RTH. I turn on my market profile and I look to see if they had a balance, and then they left OVN single prints, and that's what they did on 725, and then basically the level I'm playing.
That picture described it perfectly. Thank you.
Yep. So here's this, right? Double distribution, right? So this is a live example. I forgot what day it was. But here's your double distribution right here. You guys see that you have a nice distribution here and a nice distribution here. In between here, you see this? There's a split of single prints, and you care for this, right? And here I zoomed in a little bit, and this happened in the F period. So now when the price comes back to this level, let's say 50, 56, 52, there's a high chance for a very good long. And you would look for, when you say taking a trade is easy, but managing the risk of that trade is more important, right? In this case, I don't have much more context than this. Let's say this was the long I'm taking. I would probably put it below this value area low of this profile, right? Which happens to be right there. So you're looking for longs on a retest or shorts on a retest. And then when you look at the bigger picture, right, is this the same zone right here? So look at this. We went here, right? This is the level where you had. So you opened and you closed here, and then you spent a lot of time here. You had a poor high and a poor high. That becomes a crowded poor high. I don't want to lose you. I'm giving you two things at once. When you have a crowded poor high, what do they like to do?
Go the opposite way.
That means the market participants are not long here. What they like to do is they like to auction lower from it. So here's your open. And what did they do? They rebalanced the inventory. Where did they go? They went right to the balance, and look what they did here. They went right and they opened the next day and they closed in a B-shaped profile. B-shape usually means that there was a liquidation, and this is exactly the liquidation of the longs. They went lower, right? And look, close, open, close here, right at the POC with the poor low here. So now when you think about it, how do you play this? the market's giving you quite a bit information here. Anything below acceptance below here is bearish, right? You're looking for lower prices. Well, look what they did the next day, right? They opened where? They opened way above the value here. Is that correct? What is that telling you in terms of price?
They rejected the lower.
Yeah.
They rejected this area right here. Okay. And now, let me bring you back. Keep this picture in your head for a moment. What about this slide here? Just now take a snapshot of that. We rejected this value. We opened here, right? We rejected it. Usually gaps and making sure the gaps are held is important for bulls or bears. Now pay attention to if this is the case where they opened above it, right? They opened above that value of the selling liquidation tail, and then they auctioned below where we had what?
Poor low.
We had a poor low here, right? You see only one TPO here, and this happens to be, remember the value area low of this one. Sorry for drawing, but this is your value area high, and this is your value area low. Look what they did. Where did they dip?
Just below the
Well,
point.
that's the one that's important because that's the one that separated the value for us. So now when we dipped below, right, you had a poor high. What did they do? What is this called here?
Excess.
Excess
your
low.
buying tail. This is your buying tail or excess low. So do you have to go long here with them? No. Where could you go long?
To reclaim of 49.
Well, once you fix this, right? Once you fix this poor low, would I take this trade? Probably, right? Do you have to, as a newbie in market profile, take this trade? Where is a safer trade?
Wait for the crack above into the upper distribution.
Let them come here, and then you basically have somewhere to target. And just on this picture alone, you can define where is your target. Right? On this example itself, so let's say this is our separation of value, right? This here, is this a selling tail?
Yeah.
No.
Yes.
No. Think. I trapped you. This is not a selling
Yeah,
tail.
you
Buying
did.
tail. It's a
This-
buying tail.
That's a
closing
buying
tail.
tail.
Yeah,
You
yeah.
opened here and you closed here. So I was tricking you.
Yeah, you did.
And then if you know that this is where the buying tail is, I mean, you could go from here, or if you look at the rest of the days, you consolidated for 2 days, you had an imbalance right here, right? I could find where was the fairest price of the sell point, which was here. Where's the value area high? Here. So you have multiple levels to trigger 5100 as close it. And then when you look at the next day, what happens? They have a little bit of access, not much, right? Here. And then they have another gap up above that and above this range here. So all the people that were long here, they closed their longs here. What do you think they're doing now? Here. They're going to be buying this. So typically they like to destroy them a little bit more and then go higher. And then people are like, man, this is not made for me because I don't get it. All right. So frustration comes in. People buy at poor spots. You don't necessarily buy here for longs, right? But does this make sense? This is called a double distribution setup, and you guys will hear me say it quite a few times if I see it. This right here, where they split the value of the profile, and they're trying to accept the prices in the upper. If they crack below and they accept it, most likely you're targeting the opposite extreme of that. Does that make sense?
Yeah.
Yeah, it makes sense.
Okay.
Yeah, just to clarify, Shorty, OVN is acronym for overnight. Is that correct?
That's correct. Overnight.
Thank you.
Yep.
Shorty, this is 5 ticks on ES.
No, this, I don't know if this chart is, but usually I look at, until morning, I'd look at 3 ticks or 2 ticks, and then I switch to 1 tick so as we have more data, just because the visibility of the chart, you lose it. Yeah. Here's a live example that's current. So how would you prep for it tomorrow? Here's your, this is your June data, June 5th. What happened on this day?
Double distribution.
Okay.
Open
Opening lower value and
low and
closing
close above.
upper distribution.
Okay. Is there any cautions that you guys see anywhere?
There's
Is
excess
there
at the
with,
bottom.
a poor high?
Okay. We'll have to check to see if that's a poor high on the 5th, right? Because it could be that there was a spike.
Okay.
But in terms of market here, is there anything else telling you here?
Excess at the bottom.
Poor low.
Okay. Access on the bottom is very good right here. Pay attention to what happened here. Look at the price action. The orange line is how the price went. They went there. From poor highs, they like to go away from them first and from poor lows. Here's something you should note down. Is each poor high or poor low equivalent, meaning they're the same? Are all poor highs and poor lows the same?
No.
Which one carries more weight and what scenario?
The more the more sessions that create the poor high or low, the
Okay. But would you trust a poor high in a bracketed market or a trending market?
Trending.
bracketed.
Trending. So before you have unfinished business somewhere, so think about it. If I'm auctioning my PC and I can't get over, let's say I start at 1800, right? Give me a scenario. And at 1805, I can't bid higher. What if I started at 200 and I'm stuck at 1805?
Trend is stopping.
Start selling it lower.
This was a trend, meaning I went from 200 to 1800. So you want to see a trend or single prints before you have a poor high or poor low. Once you add this little piece of information to your trading, let me know how it works. You could literally make a living off of poor highs and poor lows. You want
Repeat
to
that again with what you meant in the single prints and
repeat
poor
that
highs
again,
and lows?
It's all here. We'll get there.
Oh yeah, okay.
So poor highs, poor lows, you want to see a preceding, you want a prerequisite of single prints. And that gives you that, hey, we are trending and now we are slowing down. That means that we became, let's say at the top, we became that long and you're looking for a pushback, meaning like we just had on that prior, right? So what did you have prior to this poor high here? Is this a poor high? Is this a poor high?
Yes.
This is a yes. This is definitely a yes. And this is a yes.
The middle one is not really.
This one's a poor high. There's definitely a poor high. One
Yeah,
TPO.
One TPO, but no single prints before, right?
Yeah. Yeah. No. Well, single prints.
Yeah, all the way in the back. Yeah, sure.
You have single prints. You have single prints. You have single prints.
Yeah.
So they're defending this zone here and they're buying it, but they're leaving unfinished business. That means the market became too long. When the inventory is too long, they gotta rebalance it.
They have to.
It's like we talked about the CarMax, right? CarMax has, let's say, 2,000 cars of Yukons here, GMC, and it's just sitting at the lot. Well, my inventory, I mean, I have a lot of inventory to sell. Well, I have to bring it down to find the buyers to sell it. So they get rid of it. And at the same time, what happens to the people that initiated at a poor spot? Let's say Cuban, it's like, man, we just broke PDH here. We're going high. And then they leave a poor high here. What does that mean for, most of the time, what does that mean for Cuban's position?
Oh,
Bye-bye.
He's fucked.
Yeah.
And that's what the market generated information means. When you're coming here, you're like, man, I'm not able to crack this high. And let's say the delta here, and I'm adding some concepts, is plus 2,000. This one is plus 5K. we're buying aggressively, but we're not making higher highs. That means the inventory is not long. They usually want to trap those people, and then price goes lower, right, to the point of division, and that's where you're looking for buy.
Shorty, don't you see absorption at the top when that's happening?
Yeah, this on footprints, this would be definitely an absorption because there's a lot of volume,
Right? Yeah.
a lot of time here.
Okay.
So this is double distribution setup, right? I'm more worried about that you guys understand bottom distribution, top distribution, clear division of value. We want to be accepted at the top, and I like to play the retest where we go higher and you go here and then you go for long. Okay. Does everybody understand the visual of double distribution? Okay. Well, here's your current one, and that's pretty much your, prep for the upcoming week. So even if you're going a weekly profile, you should see something. I think it would be like a C period on weekly. You should see some zones here. And typically, you don't want to put a stop loss right below it. You want to find something else, whether it's POC from prior or value area highs on the left. You want to hide. And we had a same scenario happened on a 725 retest on the market the other day. I think KJ said, I'm going to put my stop loss in 06. I said, I'm going to put it a little bit lower below that POC so they don't come and get me. And what did they do? They probably swept to the 06. They did not crack below the level I put. And that's, tapping my own shoulder, but I'm just telling you, you have to think, how do I protect myself? Where do I manage it, right? Well, I figured if they're going to come, they might tap this and then go higher. And that's kind of what they did, right? They tapped, they took people out, and then they proceeded to go much higher. Okay, so let me go on to does this make sense?
That was really helpful.
Yeah.
I like to play this on first taps, right? If it's already been tapped the first time, you can watch for look below and fail, meaning that they auction lower, right? And then they reclaim it. What does that tell you here then? Is the price being accepted or rejected here?
Rejected.
Rejected, and that's what you want, because remember, in the box, who's buying below the value?
Responsive.
Institution.
Buyers, and they're expected to be there. So if we come here and they buy and they reclaim it, that's a go long level. That works 9 out of 10 times. Do you guys remember 53.14 level? I have levels in my head. I can talk to you about this. Do you guys remember that?
Yeah, I'm looking at it now.
Yeah, I'm pretty sure I played that and got stopped.
Single
'Cause it's
print
you
on
said.
Wednesday.
So let me go back into profile. I'm just gonna kind of go here for a moment. So if you grab this value here, remember we talked about if you grab this 53.14 here, let's just grab this to here, and we'll not extend it. It's right here. I drew a picture for you guys. I mean, maybe it was, I'm pretty sure it was 14 here. But okay, let's say it was, no, it was 14. Sorry, I'm stickler for that. So remember I said, I posted a picture, I think in the shorties, and I tagged all of you. I said, these are the 2 levels that you want to know about. We said 53.06 was important. That was a bullish sign that we want to go higher. But then I said the 14 leads to 44 quickly. And I think we had a poor high at 48.5. I forgot, somewhere here. I think it was, yeah, it was 48 something, which was here. Why is that? Why was this level important?
51 was a prior balance high.
No, why is 14, this 13.5? Why is this one important?
Separation of the balance.
Range.
This was our balance for some time, guys. This was your value of this balance right here. So remember, the value, the way it works, right? When you look at that box, if we go below the value and then you reclaim it, you're going to target the opposite side. So let's look at the example. Right. Thing is not going to stop. So once we, came back here, right? So let's just switch to candles so you guys can see it. Look what happened. Once you got in, you went quickly back to 44. And then I said 49 earlier. Remember when I said 49? Because that was your balance high. Besides this, I think this was news. For some reason, I don't know what that was, but it was news, and I don't really count that as a level above. We rejected this 49, and then recently, when I said this was a huge level, look what they did. They came back to that value area high level, right, which was here, and this, and what did they do? What are they telling you right now?
They're either going to accept it or reject it.
Okay, so now I'm just gonna switch back and forth a little bit so you guys can follow along. Does this? Can you see, connect the dots? The model and what I'm teaching you?
You're trying to build value higher.
Yeah,
This is right here, right now. We are here. You see how we had consolidation?
What you're saying is long ES.
Long ES, but you have to manage the risk up to here at 42-ish. You know, once you put in, let's say you crack this lower low, well, shit, you might be in trouble because most likely you're going here.
You're going to the bottom.
There's target POC. This one is your second. That means that we are being rejected here at all-time highs. The only thing that's different and harder to trade now is that we're flirting with all-time highs nonstop.
But Shorty, couldn't it be a scenario that they get to back to the top there and go back up?
No, of course. I mean, they're defending this. There's nothing bearish right now on this chart.
I got you.
There's nothing bearish on this chart right now. They're still defending. They're above the value. Let's say tomorrow, yeah, it's Monday. We crack below 43. I would not hesitate to short.
Yeah. So as of now, it's being rejected, but it could be.
We're rejecting this value, right?
Right.
But we are seeking higher. And now your next value that's being created is here.
Okay.
And what's not good when you have stacking values like this one, for instance, is you don't want to see too much value being stacked together, meaning when overlapping. So in a bullish markets, do you want to see too much overlapping values?
No.
No.
No, because overlapping values means what in terms of confidence?
It's not accepting higher prices.
It means that there's not a lot of net new buyers. That means that you're riding on the old business. Old business would be indicate what?
Reversal.
Usually it starts from short cover rallies, right? So if I was, so for instance, let's take a look at the setup that we had from this section here. So if this was our value prior, right? So this was a spot where we had the, remember the 3-day balance, 52.45. I'll draw it if you don't.
Yeah.
So it was somewhere around 52.45. This was the level that we were watching, right? From the prior 3-day balance that we talked about in some detail on the call. We said it was fairly narrow. You know, we lost this value here. But then, you know, if you go on higher time frames, I'm on smaller time frames, right? Look at the value. Where is it being built before? We are in this value. We rejected it. Now it's different time frame, right? I'm on bigger time frames. We were here, then we came back, then we went above this value, right? We went above here, and what happened? They're like,
Back inside.
let's go back inside. We went back to the most recent value, the equilibrium. We touched the bottom of it, and we bounced, right? And then if you look, could you find level why we bounced here? Yeah, certainly we had actually, I think 52.10.5 was a weekly epoch at this point. If you guys remember, and we said, hey, this was a good long. Actually, we did go long here, and I think Vartez was messaging me when he was going to go long on this level here. He was asking me, what do I think? Because he's, well, I'm not going to go in detail, but he's limited on some trades, right? He can't take more than 2 trades a week. So he was asking for forgiveness that day because it was a setup that he's been eyeing for some time. Let me see.
Yeah, what was so beautiful about that trade was like you were like, they're gonna lose the level, reclaim it, and then on the retest go long. And if you zoom into like 30-minute time frame or something, or even 5 or whatever, you can just see it play out exactly like you said. And you even said they lost it a little bit more than like, you know, you'd initially think. but it was because the setup was so good. And I think Beans is the one who got in on the long or something, made like a couple mil or some whatever it was.
So here's, for instance, Vartez, and I'm not showing to shame him or anything. It's just the process that he's in, right? He's learning. When he first joined, he was in a trade 9 out of 10 times. You look at the screen, Vartez has a trade on. Well, he's been put on a diet, right, where he can only take 2 trades a week. And this is his discipline on checking to see how's the setup, is it worthy of losing one of those trades? And you see his questions, can I get another trade at the WEPOC? And if you go back, that was the day where we did that, right? 5:31 Friday, do you guys see this? And he said, I'm looking to see if they're gonna lose it and regain that so I can go along. And that is the concept that that you want to be after. You want to plan your trades and you want to execute them, but you don't have to be in a trade all the time. And it works better for you if you trade less, because guess what? I don't know what your guys' commissions are per year, but they add up quite a bit.
And you go for the golden ones, it's pretty good.
Yeah, I mean, if you can go for longer points, right? They hit the poor high from VPOC, blah, 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 80-point right. And that was his trade that he was looking. And the reason why I said yes is because it showed me confidence what he was looking for. If he was, is there days where I tell him no? A lot of times I say no. Yeah. So there's no reason not to push yourself to a good trade and reject the shit trades. But you have to start realizing, where are you buying? What are you buying against the bigger time frames, right? And I don't draw boxes here to just look pretty. They mean a lot, right? When you're consolidating in a period, you're rejecting, let's say, we did here. This is almost a really good zone here that they're creating. It's a clear distinction of value. For me, it is. You have upper, so now if they can't reclaim this, let's say they lose this level, which was our prior, remember the prior all-time high at 23 or so? What would that mean on long time frame participation? What do you guys expect?
That's the bottom of the value.
I would expect, let's say I'm a trader, I would expect us to find a POC here somewhere. I think it'll be at 45. Then they would go to this. They would, it's not going to go direct, but ultimately you're looking to see, can we get back here, right? Can you use different skills that we have? So here's your POC at 46. You would have some, you see this little split here, a value area high zone. You not want to be necessarily short here or initiating short. Once you crack this, you're accepting lower. You're caring about the price acceptance and rejections. And then what we're covering now is, I'm way beyond this slide, is the setups that give you that. And double distribution is that one clear separation of value where it leaves single prints in the middle. And that's what we're kind of looking for Monday as well. I was hoping they give this to us. Actually, I think they did this ETH. Let me make sure. I'm pretty sure they did this ETH at 37. Yeah, they did this the other day, I believe. They did something on Friday where we wanted the retest.
They did it before. Yeah. They did it at 8:40
Yeah,
a.m.
it was
At 8:40 they executed it, and not much we can do as traders, but you can watch for that level in RTH session and see what they do, right? So I think it was. I'll just bring it up so you guys can see it. And if you're annoyed by me flipping back and forth, I hate when people do that, but I'm trying to relate to what you guys are seeing. So if you go here, for instance, this is the zone, correct? This is the zone we're watching. So now if I go on ETH, let's see here. Look where they came here. Let's switch it to candles. It would have been a pretty good long, but I was not there. You guys are not there, and I don't like trading news that much. And you see here, they came back, boom. Beautiful long, right?
I had an alarm set for there and everything. It went off like super early before trading.
I saw you, man. You actually, you made me look at it. You made me look at it to make sure it's. I was hoping they didn't, but they did, right? So
I set the alarm like a day before too. Like I put the level at like 337 or something, and I was like, set just like ring my trading view when it hits this level, and it happened like before I even woke up at like 4 a.m. or something, 4:40, whatever it was.
So everybody clear on double distribution. It's a really, really good setup, guys, to trade. It requires a lot of patience and waiting, but I promise if you're to just test it, take it for a week and only look for this. If it doesn't happen, you don't trade. Look to see if it plays in your favor. And if it does, guess what you should do the rest of your life?
Play that.
Play fucking same setup.
Not work. Yeah.
Imagine what is your job? I just wait for one visual to come and I make $5,000.
Yeah, that's pretty nice.
You go tell that to somebody, right? And Keela, for instance, she's calculating her hourly rate. She's getting paid $2,600 an hour.
Wow.
Go find a profession that makes that kind of money. Unless you're an athlete or, I don't know, some top surgeon.
A bank's risk manager.
Or that.
Yeah.
But you're still stealing people's money, so.
Yeah, that too.
Okay. So next concept is the spike, and this one I would rank this one as pretty high on my watch list. And you guys, I write these down for you guys multiple times when they happen. I draw the zones for you guys, and I make sure that you guys are understanding what's happening and how to play it. But you have to really understand why, right? Why is it that it's important? So the market profile, as we explained, it's limited by time. And each period validates the next period, right? Or invalidates it, right? So in this case, M period is your last period of the day. If you guys remember what we did here earlier, you see the M period is 3:30 to 4. That means there's no other periods behind it that need to validate it. So when something is carried forward, right, we want to know if that is going to be accepted or not, especially because it's the last 30 minutes movement, right? So now when you think about spikes, that just means the last 30 minutes, they made a move that's above prior period highs or lows. So in this case that I'm showing here, you see the L period was the high. Initial balance is really close by, which also gives you a little bit more confidence, right? At least it does to me, to go long. So in a bullish spot, the first spike of the L period is called the base spike. That means that's where we spike. That's where the M period has single prints, right? As you guys can see here. Don't count the M period.
Go ahead. Go ahead. Keep threatening me.
The base is the beginning, right, Shorty?
Good.
Base meaning the beginning, right, Shorty?
Try and figure out who that is.
Kenobi.
Shinobi, go on mute.
I think he muted.
I got it.
Yeah.
The L period is the base in the bullish market. So let's say if we cracked, let's just imagine the I period here was the low, that we didn't have anything below. The break of I would be the bear spike start. That would be the base on I. So if this happened here, for instance, and I have some examples, right? So if this was the base spike here, right, and we auction lower, this is your base spike, right? I put BS, not bullshit, but base spike. And let's say closed here. Then this is your range for bearish setups and rejections. In this scenario that we are here, this was a bullish spike. What it means is the colors. If we open and we auction below this base spike here, what does it mean about the M period?
Being rejected.
It is being rejected. That means the most likely, right, that we're going to auction lower and search equilibrium prices. In this case would be 48. Okay.
Would you count the spike if we had I mean, I guess we wouldn't have a poorer access at the end of a spike.
No, never have.
Yeah,
no,
never mind.
No. And periods are always, that's why I tricked you guys earlier, right? Well, not tricked you. I said, I don't know if that was the poor high, because if there was a spike, it could be the end period printing next to M at the equal highs, and that doesn't mean much, but it looks like a poor high. No, you never have poor highs, poor lows. You don't treat it till the next day.
So
I say carry forward.
So the spike usually happens from N to M?
No. So spike happens here.
I know it's at the end, but
it happens from 3:30 to 4. So
yes.
it goes M, and then after that you have the settle contract price, which is the end period at 4:15.
Okay, yeah, that doesn't, yeah.
You do not
It
use
counts
end
as the M.
period for nothing. Only the settle price we obtain from end period.
Gotcha.
Yeah.
So what matters is the M.
M is the most important one, and that's where you find the base, right? So you see how I do not care for N at all here, right? My levels are now based of it. The top of the M is the end of the spike, the base end. The base start is here, right? And now, if the next day, let's say you open in between here, this is semi-bullish. This means that you're not rejecting the prices, but you're not accepting higher, right? So you can't be bearish necessarily as long as you're trading here. If you go to last week after this class, I promise you will find one where we traded quite a bit. You guys know which one? Do you know the levels by heart? I mean, you gotta breed this. It has to be your life for a while until you become.
I think it was 51.75 was the base, or was it?
It's a little bit lower.
7.25.
A little bit lower. Yeah. Wasn't it about 61 or so? 53.61-ish. Well, I'll bring it back up so you guys can see it.
Yeah, 61.75 was the base, 67 was the end.
Yeah, that's correct. So now, if we open above it or action above this, that means we're accepting the last price action, and most likely we're going to proceed higher. If we open or auction below during the RTH, right, there's a high chance you're going to go lower, and then you would look necessarily whether it's POC or any other levels you would have in the area, PDH, PDL, in that area. Does that make sense? The spike. Is anyone confused about spike? When we say spike, what does it mean? Please ask questions, because don't walk
Single
out.
prints.
Well, it's
right?
single prints in the last period, right?
In the last period, okay.
Can you
Can I
explain the
spike
first part again?
Yep, I can explain it all again.
Single prints in the M period.
So let's
Last
shift to
30
the next
minutes.
slide. I have an example here.
Just quick yes or no. Can you have a spike in the beginning of the day as well?
No.
No,
'cause you
okay.
have A and B period, C period, D, E, F, G. M period is the only period that does not have any other time left to validate it.
I see what you, that's okay, thank you so much.
And that occurs in the last 30 minutes, correct?
Just think about it. Each period here, A is validated by B and C, and as you get closer to the end of the day, time regulates opportunity. M period is the one that has nothing to validate till the next day A period starts.
Correct. Yep.
Okay. So now here's the example, right? So I think this is fairly recent example. So in this day here, right, I don't have letters, but I guarantee you this is M here. Just I tried to fit as much as I could on the slide. So if this day here, you see that the high was here and we spiked above the J period here. This was J period. So this is your bullish base and this is your end. The next day, where do we open? This little thing here indicates the open. We open above.
Okay, so you open above.
So if we open above the spike, you're looking bullish, right? That means that we are looking for bullish outcomes. We're looking for long inside here. Well, if you look for long inside here, how's that? Pretty good, right? The next day, just keep following. Next day, 2 days after the spike, right? If the spike has not been tested the following day, not cracked below, you can treat this as a zone moving forward. Okay. So now look what happens. There's something really, really interesting that happened. Do you guys see it?
Shorty, before you go any further, when you're looking for long, does it have to fall back into value or it can retest the top of the?
It can go here. It depends where you're managing, right? I like to see if I can get in here, like one contract. And let's say I come in somewhere in the middle for the second contract. It's not a bad plate position unless this happens quick, right? And then you have to go market. You don't have limit sell. As long as you don't break here and below, right? That means that you're accepting. Most likely you're going to reverse and auction higher from here.
Okay.
So this becomes your semi-bullish zone for buying. I mean, the lower you buy closer to this or a loss and a reclaim, the better,
The
right?
better. Okay.
Your risk is a little bit less.
Okay.
Yeah, and that's what it did. It lost it and then reclaimed it.
Yep. And then take a look at this point right here, you know, on the following day. So they defended the zone pretty well. The whole day they carried forward, never auctioned here. POC shifted higher, value area high, shifted higher. Look at this day here. This day was pretty good. What did they do here?
Open below and then
Open
We
below.
opened
reclaimed it.
low.
Excess.
Went
They
back
bought
inside
it
the
cheap.
value.
The B period gave you access low. This is the B period. They extended this. I'm not gonna go. Let me go. The initial balance got extended here.
That'd be a poor high, right? As well.
And you have a 4 high here.
Mm.
So what that means, when you bring the sucker back to this level.
Oh, because they're going away from the poor high, but then holding the spike, and then they go higher.
There you go. Somebody clicked. I gave you two concepts of poor highs and poor lows. When you have a crowded poor high, which you did. Here, you know, you have small access, which is a poor high. So this means this was your crowded poor high. Typically they go lower and they had a really good base here off the spike to go long. This is your A period. And I always say A period access or B period access is very important because they tend to hold 78% of the time. Is that what I typically tell you guys? I think I wrote
Same
it.
day.
Yeah.
Same day, yes. And this was your access low for that session between A and B period. And look what they did.
That was a nice
Right off
retest.
it. Yeah.
They came back and they gave you a really, really good retest. And then how would you play this? Well, I drew this little box. I obviously drew it afterwards, but I'm giving you typically this is what you're looking for in terms of information to construct what am I doing? And if this is the case, for instance, if I'm going long here, once you reclaim this level, I will put my stop loss slightly below this. And look at your reward. What would I target with this? This
poor high.
because this is a poor high. They have to fix it. They have to repair it. So it doesn't necessarily mean they will fix and fall, but you're not here for eternity. You're not here to catch 2,000 points on a trade.
Yeah.
This is 27 points, guys. This is $1,000.
And the retest was there, right where the circle is, right?
I mean, they opened below, right? They opened here in A period. They brought a B period. A and B period here gave you a low. They gave you a really nice retest of the axis, which happens to be also the base spike, right?
Base spike, yeah.
So you have this, you have the access low intraday single prints. I mean, and this is a good trade because you know, Chance has this combined two pieces of market generated information to you to make a decision, target, and a stop loss. Market gave you everything you needed in this trade. Does that make sense?
Yeah, and it gave you everything before
When
it happened.
you say crowded poor highs, is that because it was 2 days?
Yeah, 2 days. We spent a lot of time. We did not make higher highs. We're standing there, and what that means is that usually short-term traders are the cause of poor lows and poor highs.
Mm-hmm.
So, and usually they want to take your inventory from short-term traders because you take it from take it from the poor, give it to the rich. So in this case, it means two things, right? So if you're going long here, for instance, right? Well, you know, they take your liquidity now and then they're going to get you out. Once you're out, you're not in for long, then they dip here. They trigger these stop losses, they reclaim it. And now people are like, oh man, we're going to go short.
Go short, yeah.
But this is actually a long setup.
Yeah.
That's that market maker trap happening right there, right?
That's a buying tail, isn't it, Shorty?
That's correct. So this would be your A period buying tail.
Gotcha.
Okay. So does this slide make sense? And the spike, the important slide of this is to understand the spike that happened on this day, but if followed through the rest of basically the 3 days, you could have played it. Does that make
I
sense?
gotta get TPO today, man.
Yeah, thank you.
When does it become irrelevant, the spike?
So the spike, let's say this spike here gets cracked and we accept it, you don't longer need it, right? If this was, I don't call this necessarily accepted, right? Especially because the price flew back above it inside. Once you auction below and this is closed and that spike is rejected, right? Right now you're accepting, I don't know what time frame I'm on. Maybe this is May. I'll have to check. But at that time, once you close below it on a daily, that's being a rejection.
Okay.
Yeah.
Could you reiterate what you said about the spike base or end hasn't been tested the next day? You treat it as a zone.
So I mean, here you have this zone here, correct?
Even though they auctioned to the top of the end of it,
Yeah, they came here.
it still hasn't. You wouldn't consider that a full test because it didn't test the whole.
It's definitely a test, but they're accepting prices higher. They're accepting price higher. We did not go lower the next day and reject it because the next day is the carry forward. Between this day and this day, what did you do on this period? Well, you came a little bit inside and you went higher and you closed higher.
So assuming that now that the next day after that one,
this one,
so that yes, that one. Let's just say we didn't gap down and open. We just opened where we closed.
Okay.
Would you treat the second? You're still treating it as a zone. Would you be a little more?
You're bullish. You're still bullish.
Still bullish.
Your sentiment out of this is to drive whether price is being accepted or rejected. As of right now, let's say they opened instead of here, they opened here. That's good. That's bullish.
Yeah.
But they opened below and then they quickly reclaimed it. That's a really, really good setup for a long.
Would you potentially? This is where like order flow could come in, but would you be a little more hesitant to take the spike end long again? Would you want to wait to see if they bring it to the spike base or just somewhere in that zone based on order flow? Just because it's already touched once, does that matter to you?
Say it again. I'm not sure if I followed.
So would you be more hesitant to take it long off of the spike end because it would be a second touch, or would you?
No, not
because the zone is still holding.
Still holding them. That first touch, second touch bullshit doesn't play a role.
All right.
They always defend.
It's about price being accepted or not, right? And here, they rejected it below. Hence, they're telling you that you're rejecting below. Well, now this is your high of the day, and you see, right? They basically traded to the high of the day.
Yeah, it's about time, right? Because it's time, price, opportunity. So if we spend less time below the value and more time above the value, they're taking it higher because they spent more time above there.
They're accepting prices higher.
Yeah. Okay, that makes sense.
Kind of where we are right now in the market currently. So does the spike? Does anyone not follow the spike? It's just the M period. That's all you care for. It's a pretty neat setup to watch for. Okay. Initial balance extension. So this is where you want to pay attention how it's formulated. This is where type of days come into play. Something I think KJ is looking to get better at reading. Day to day, you're gonna have markets that are always forming some type of day. Is there indications when you have a narrow IB, right? Initial balance of A and B that is super narrow, what could happen? Yeah, narrow IBs tend to be broken most likely than a wider balance. So if you have a typical day with the wide balance, most likely you're just going to oscillate, between the tops, middle, and the bottom. And then the importance on the close of a day as such, right? When you have a typical day and you close above POC closer to the value area high, that's bullish extreme on a daily, meaning that you're willing to accept prices higher and you're closing at the high of the profile. So that's something to pay attention to, because out of that day, for instance, most likely you're going to break out and have a trend day the next day. When you have a super wide IB and you close right at the POC, what does that tell you in terms of auction? What does POC mean?
Position of control.
Point of control.
And it's a fair price. So they're not telling you anything. They're just telling you we might stay in here again. So they're not much indication, right? So when you have a P shape, let's say you're trending higher, right? And let's say your IB is this much, and then, you know, this is your A and B high here. You crack this and you go higher, right? Well, this is forming most likely a trend A. You're going to come here. You're going to have P shape, and you want to hold and build value at the top. There's going to be some profit taking unless we have a liquidation, meaning we sell it lower. Most likely you're looking for continuation on the P shapes, whether it was driven by a short cover rally or really buying. You're looking to go higher, right? The point of initial balance is to keep in mind when, you know, you have an indicator on that I put down here. That says the wider the balance, right, the harder it is to break. And if you go test it a few times, if the balance is super wide, don't think that you're just gonna easily come and break this, because that means wider balance has more or less participation.
More.
More.
I mean, just think about it. If there's an auction that has higher prices, that means there was a lot more people participating in that auction, different price levels. So to break the wider balance, it's much harder than the narrow balance, right? Narrow balance means that there's a lot of short-term traders, and typically doesn't take much but one other time frame participant to crack that, top or bottom.
Shorty, just for your last point on this PowerPoint, I'm looking at it now, and I think it's Noop, not Noob, but like with a P.
Oh, maybe, yeah. Nope.
But yeah, I think I see it.
Yeah, you're probably right. But Noob.
That indicator, that says initial balance, that has the times X's.
It's called Noop, not Noob.
Yeah,
Okay.
yeah, Noop. Yeah, I got it. Thank you.
Is that a good one to use, Shorty?
That's the one I like because it's simple. I don't need a lot more than just, I mean,
Right.
it calculates your averages so you know what
Yeah.
type of day it is, meaning is it wide or, you know, narrow compared
Now
to
you're
prior
close
days.
with 50%.
Yeah, so I think it's a really good indicator to have. And we have similar on your Shorty indicator, right? You have the IBH, IBL and stuff, but you don't have the extensions.
Yeah, the orbs.
Yep. Okay. On the initial balance, you know, whatever you trade, NQ and ES, it's going to be different reference points in terms of what is wide. But 50 points on, I would say, on ES is super wide, right? That's probably, you know, 50% more. So once you're looking at the IBs, you want to pay attention, you know, how are we going around the extreme levels? In this case, you know, we had the L period that made higher highs. And then the M here, you know, went and dipped below the L and below the K period, indicating other time framing between the periods is slowing down. So when you go here, right, no C pair low is we are printing single print buying tails. So here, if you look between A and B, they printed an excess low, right, meaning they have single prints here. Other time frame participants are in here, and then you see we never really even came to the POC here. They're indicating that most likely that we're going to be auctioning a little bit higher just based on the each period, right? And the rule I use on the periods, if you guys don't know, maybe write it down. Each period, you grab the fibs from the bottom to the top and you look for 50%. As long as they're holding 50%, it's a really good framing up between the periods. So I would have that, you know, rule or just the idea tested and make sure that you guys are following along. Does that make sense? The initial balance extensions?
Yes, sir.
Yes, I think so.
Yes.
If you go above initial balance, let's say the black line that you guys see on these charts is your initial balance. And you see here, for instance, on this day here, the initial balance, we opened here, we closed here, right? So we had a lot of auction on the top, but then we closed right below it. So when you think about it, this was your initial balance, fairly, you know, I would say fairly narrow here. Then you have the next day. What do you have here?
Wide initial balance.
Like a huge initial balance.
As a basically an, I would say, overlapping or outside day value area, right, compared to the prior day. Also to note, on this day here, you had a poor low, a really nice poor low. Well, what they did here, right, is they came back, and it happens to be the PD value area low and also a poor low. They came in here and they swept it with nice single prints, and then look at the POC here. The fair price here is now being used as a clear support, and even if you took a trade here, targeted value area high, that would have been a really good trade to target. They swept the poor high, and typically they go in the opposite auction once you have this, right? Confirmation between. And if you're trading this, let's say this balance was super wide, like it is here. If you draw an FVP on this as a trick, and find where the POC is at that time, most likely you guys would have the ability to take good trades, knowing what you know about poor lows and excess lows, and knowing where the fair price was deemed before. And that was probably, the best play was taking this here and putting the excess below the single prints of 47. So you're looking about 9 points, but you have quite a bit to target. If you played this, you had the halfback as a target. You could have had even the excess lows here as a target, right? I'm sorry, excess high as a target. And you see there's some kind of gap here. I don't know what day that was, but the idea is that when you have a wide balance, most likely you're not going to break it. But if you close on the upper distribution of the wide balance, because this is a clear D-shaped profile, that seems most likely bullish the next day. And in this case, this was a trend day up.
Shorty, how long does it normally take for them to fix the poor low or poor?
On P and B shapes, it takes longer than D shapes.
Okay.
Yeah, and remember, not every poor high and poor low is the same.
Okay.
All right. This one here, does this validate as a clear poor low?
Yeah. They completed it the next day, right?
Yeah, but why is this a valid poor low?
Because there's not single prints?
They are single prints.
Oh.
So you had preceding factor of selling. This was a trend day down. You want to have a trend, you want to have a strong auction before poor lows and poor highs show up. Okay. Well, let's see what it says on the next slide. So poor high, we only have one TPO period by itself indicating poor auction had failed, or you could have two, right? So if there was a C and a D on the top here, that's probably a better poor high than just one TPO in my book. So if you have two TPOs or more at the same level in parallel, or one, that's called a poor high or unfinished business failed auction. Typically, what they like to do from the poor highs, does anyone want to take a guess? They auction away from them, right? So let's kind of look here. I think I had some right here, for instance. You see how we had the poor high? What did they do? They auction lower, then they find their buyers, and then they fix it. That's called repairing. Typically, the second time you come to the poor highs or poor lows, there's a high chance you're going to break them, and you're going to get a follow through. So is every poor high and low same probability? No. Most of the market profile strategy is about context surrounding the price. So if the market's too long or too short, it means prior to the making the poor high or poor low failed auction, what we needed is that we need a strong trend like here, right? So you had really nice trend in A period, right? Which indicates 78% of the time you're going to hold this. Then most likely you're looking for a long opportunity here to fix this C period poor high, right? First you need see emotional selling or buying prior to poor high or low. So the prerequisite for a valid poor high or low is trend. You need to see an imbalance somewhere. You need to see somebody being aggressive. If they leave unfinished business at the top or bottom, you use that as a magnet for next session, meaning to carry forward the next day. You would use it as a kind of as a level here. Actually, I thought I had something here. Let me see. So, for instance, take a look at this. Does anyone want to take a stab at analyzing this? I left something here that's missing, and it's your job to figure out what that is. Read this and tell me what is it that you could use additionally to help you make a trade.
Fibs.
No, don't worry about fibs. Just market information.
Looks like 5222 area is a distribution change.
You can log off the single prints that happened in the morning on the middle day. It retested.
I put the dates here so you guys can reference them.
Sorry, May 8th. There's a long off of the single prints.
This one here, May 8th.
Yeah.
Mm-hmm.
Right in the middle of the day.
Yep,
they come back, they touch those single prints, and boom.
They gave you this opportunity, which this was a valid setup, right?
And it's all after IB, so you know like where they've set value for the day.
Mm-hmm. So what happened here from May 6th to 7th to 8th to 9th? Who can describe
Value
this?
shifting higher. I would go long May 9th value area low because it's the May 7th value area high, and it looks like that's where the potential balance was broken. And if they want to validate the balance, the imbalance, they need to hold that.
Okay. Anyone else have any other takes?
So on May 6th, you had single prints and a portal high. Basically, the next day, May 7th, you went above all of them.
Okay.
So I guess that was bullish, but on the retest on May 8th, you had access on those single prints.
Why do you guys think they dipped down? Why do we go here? Pay attention to here. Pay attention
Or
to
high.
here.
Want to test the value?
Well,
It was being accepted higher.
market was too long, guys. Market was too long here. Market became too long. Inventory became that long. And what did they do? They bring it back to a level that you guys are not seeing.
The level at the bottom.
But why is
tested it.
this zone important?
Oh, I see.
Well, it was the upper distribution of the single print on May 6th in between the distribution right before close.
That was the missing piece for your confluence. What she's talking about is this little piece right here.
Oh.
They tested it on May 8th.
So on May 8th, they came back here and then they closed above, and somebody said, luckily, you know, look at this level where they came. I'm sorry, but I'm trying to do my best with lines here, but you guys get the point. So this was actually a spike zone. This was not a poor high, but it was a spike zone. So remember how you said, how much do you carry forward? Well, look, they came back, rejected it. They came back. They said, we want to go higher. So where do you have a long? Well, your long was here. Then the best long is here. Did you guys see why is that one a very good long?
They spiked it higher again.
That's right at open. They come down, they touch it for you, and then they sent it off.
So they came here, right? This is your value, remember? And this value is fairly tight, right? So you have massive access low here that's coming back from this here. They're defending this. They're telling you, hey, we believe the spike is valid. We're going to accept it. And they immediately brought it back up. Then the next day, where did they open in relationship to this value?
In it.
POC.
They open above the prior day POC, but within the value area, indicating what?
We're going
Acceptance. Bullish.
That they're accepting the value. Okay.
Yeah.
Now the question I have: when you accept value and the price dips below value, what do we expect?
Responsive.
People to buy it?
Other time frame to come in.
Other time frame buyers to come in. You're buying below the value.
Yeah.
That's
Now,
fine.
when you look at this, let's go back. Okay, well, we are accepting the value here, right? We're opening, and what did they do?
They break it for one TPO.
One TPO, and then they have a trend day. They opened here and they closed.
Oh, spike, probably.
Yeah, probably
Nope.
spike.
M period spike. Oh, nice. Okay. I see what you're saying.
So this was, you had a couple of good opportunities, right, to go long. Could you have gone long here on the reclaim of this? Sure, you could, right? Especially if this was your A and B periods, but they're telling you here that they're defending this spot. And also happens to be the value area high of this. So if you're thinking about the value was here. Well, they rejected it. They closed above it, right? They traded above. They rebalanced inventory right to it. I'm not telling you something that doesn't happen. It happens a lot. And here's my explanation for you with the chart below. Okay, so the question I have here, where would you target if you took a long, let's say here or here, what is your target?
Or
Value
highs.
area high.
Yeah, you have a poor high here, right? So your first target is poor high here. And that would have been a nice trade, right? If you went long here, what is it, like 5,200 to 27 without having any other information to the left, that's a pretty good trade. Right? So that's your poor high, poor low, and how you can use it. Typically, typically they like to shy away from the poor highs or poor lows and go in the opposite direction. That's usually called the crowding of the poor highs and poor lows. The end period is the inventory that we carry from day to day. If the settle price, your 415 close, is at, let's say, 5,300, and overnight OVN, you're trading at 5,320, it is set to be the inventory is net long. Typically, when you have a net long inventory, it's expected that they're going to rebalance the inventory, meaning they're going to bring it back to an equilibrium level, whether it's day prior or cumulative 2 days, 3 days. They're going to find the fair price before they proceed if they want to go higher. And same is true for net short inventory. Okay, do you guys understand?
Yeah.
Okay. All right. So now here's your audio 3 tapes. The first 3 tapes, each one is about 15 minutes, right? That you guys are getting here. So I would suggest that, you devote, and I didn't listen to all 22 tapes. I listened the first 3, and the audio here is good. This is not going to be the feeding of, hey, this is how you trade from Peter and this is how you make money. He goes into other topics besides, the trading itself, and then he brings you back and talks about what he's teaching the floor traders. You have to understand, teaching you and teaching a floor trader a CBOE is much different expectation on learning. Do you guys understand what I'm telling you directly and indirectly?
We're professionals, we're not.
So when he's talking to somebody on a tape, you're going to hear acronyms that you're not familiar with. You're going to hear stuff that you're not, and you're welcome to listen to it. Ask me, what do I think? And this is to purpose in this Discord. You're getting this so you can collaborate with other traders here and use it to better yourself and people around you. This is not intention where you record it doesn't mean much, even if you record it and share it elsewhere. It's to complement what you're learning from myself and others and see how the inventor of this strategy actually thought about it and how he taught others. So I'm giving you about 3 hours to listen, and then the next class I'll release probably 3 to 4 more. And then there's one that's probably number 12, where he talks about personal tips when trading market profile.
This in your PowerPoint, Shorty?
Yeah, all the audio tapes are actually here for you guys. So if you go here, you can hit play, and it's gonna go on.
Dude, I'm such a baby this whole time you're talking about tapes. I'm expecting like VHS tapes, like we're gonna watch a playback.
Yep. So, but it's just audio tapes, right? Back then, the 1980s videos.
Yeah, like 8-track or something, right?
Cool, man.
So I say you guys start with these 3 tapes, listen to them. It might be boring at first, but you're not in it. How do I say it? For a short period of time, you have to really understand this so you can formulate your opinions in the context of the profiles and what they mean. And then once you understand this live, you will also scream during a trade when you nail it for 30, 40 points off of a single level and you have 10 contracts, let's say even one contract, it's quick money. And it's a money with a higher probability probably than any other concept that I've seen in the market. Okay, so these are here. I'm going to upload them for you guys. And it's a little heavy PowerPoint just because there's about 3 hours of audio embedded in it. So I suggest that you guys devote some time. You don't have to do it today, but go through it and listen and see what, how does that correspond to what you guys are seeing in terms of the market, right? Is it better, worse? Are you understanding more? And I don't know about you guys, but me personally, when I read a book, sometimes I might not catch all of it in the book the first time. It might be more like the third time I read the book, I'm like, man, I get it now. It makes sense. So just like anything else, you're going to have to kind of put a little bit of effort to make sure that you understand it. Okay.
Shorty, when you're checking the days, like, do you go 30 minutes, 4 hours, just like we do in volume profile, only on RTH?
Yeah, I'll check all of it just like that. Yeah.
And your tick size, do you change it?
Well, this one here on the weekly is 3 right now in ES. If I was to go to monthly, I'll probably go to 7, 8, right? Because 3 won't do much. So
if you was to go to what now?
7 or 8 on the monthlies, right? This is your file now for June, and you see there's a nice little split of.
So 3 on a weekly and 7, 8 on a monthly, and that would that include NQ as well?
NQ you have to go a little bit higher on. I would say on monthly you have to probably go 10 to 15. Weekly probably 7 to 8. Yeah. And you can play with it and find it, right?
I should for sure be getting TPO, right, and not just learning off of your charts and stuff.
I think it's helpful, right? I mean, TPO, when we started the Discord, we talked about the volume. I always talked about the equation for value, if you guys recall, price, time, and volume. Price is, price is price. Price is just a discovery mechanism. And then we covered volume extensively for a period of time. And then I added the time, which was probably the most confusing because it's the most unnatural language that you guys have heard in terms of trading. And that's why now you guys learned volume profile. I would say majority of the people in Discord understand volume profile. The next class we're going to have is going to be volume profile, and it's mainly going to be about volume profile itself. But then people are like, well, you use TPO or volume profile? I use both, right? So I don't necessarily, discriminate. I look at this right here, and I'm able to see where's the volume. I see that a lot of volume was at 53.24, and it seems like to be stuck there. If I zoom out, for 3 months, let's say 4 months, where's the volume now? Well, volume seems to be somewhere at 52.42. On 4 months or 5 months POC, we're looking at 51.03, right? So
but your VRVP, what's your row size?
I use ticks on this. I use 2.
200?
No, ticks. Ticks per row on volume profile.
Sorry.
You can see the
ticks per row, okay.
Shorty, that 53.24 is also close to the split of the distribution, right? For that profile?
Very close. So when you think about this for the monthly profile here, even for tomorrow, we talked about this level here for some time. I'm on monthly profile. You probably can go on weekly first to kind of dissect it and go on like 3. Then it'll give you a nice single print here, probably O or what period they print. F, okay. So here, this would be your single print division on the weekly profile, right? So it's almost like it goes from 31 all the way to 37. And now the price is the same setup that we just talked about. If the price was to come back here, we'd be looking for a long. Would my stop loss be here or probably somewhere below? I'll probably say somewhere below, right? It depends what you're expecting because this is a weekly profile. You might have to play it slightly different, right? So if you're catching the bottom of, let's say, 31, and we know that this is a massive, massive now volume here, right? If you're going long here, maybe don't go full position, at the top. There's a high chance they can click this magnet here at 24.25 and then go higher. Because this right now is like your May POC plus additional week that's building. But if they come here, I'm looking for long opportunities off of this one, just off the weekly profile. So weekly does have a nice access high, which is sitting at 81.25. And then if
I
you
was
look,
going to ask, would you look for a short at the access high?
I mean, they haven't really given you heads up yet to enter short, right? So when you think about this, 53.49 right here is our prior range high. So if they dip here, this could be used as what? What could they do here? All the people that see this, they might be nice trap here. People go super short, they come here, and then they explode. If they go below 53.49, I would say from magnetism and auction perspective, there's a high chance we're going to hit this. And I know about this zone. I don't like this zone being close to POC just because this one carries a lot more weight. Okay.
That's 25, the lower zone?
Yeah, 23 to 25.
Just because of the market right now, you just wouldn't look really to enter a short, is what
Well,
you're saying.
it would be long off of that zone would be good, but the magnetism of that POC that's now building for 4 weeks would be pretty strong. So I would think if they're to go lose this 49 tomorrow or tonight, they're going to most likely go to 25. But let's say they do this, they lose this RTH and then they reclaim this.
Do you use TPO on 5 minutes, Shorty?
You're targeting the access high, right? At that point.
Candles don't matter on TPO.
No, I'm saying, do you ever go to 5 minutes to trade?
Yeah, use 5 minutes, but they don't matter for TPO. That's what I'm saying. That's not relevant. Okay. And then if you guys look at the daily profiles that I had them up earlier, if you go here, there's a story being, so on the weekly, you have a clear double distribution profile, right? Now, when you look at the daily profiles, and then if you go and set up and prepare for tomorrow, what do you have here? What do you have in 3 days? So you have a clear split of value, right? We said, let's check if this is a poor high. Is this a poor high?
It was already fixed, right?
Is this a poor high?
Yes.
No.
No, end period.
Oh, it's the end period.
Oh, no, end period, yeah.
That was tricking you guys.
But if it was, it would have already been fixed, right? So you wouldn't keep that marked.
Right.
This was our spike on the 5th, right? This was the spike that we had, right? 61, 67. And you see how much time we spent below, reclaim, and now we spent below, and now we are here at 52-ish, right? So as of right now, that spike from, what is it, May 5th was rejected. You have quite a bit of access low, right here. I would say you have quite a bit of 51 to 49. So if we are able to absorb these buyers right here, say most likely we're gonna, cracking 49, we're gonna be auctioning here. I would think that they're smart enough to go all the way down to this level here, right? 53.24, and I would close the shorts, look for long opportunities in this area. As of right now, we are not framing down. You're in balance on the daily, right? On a weekly, you're framing up, and monthly, you're framing up. So you have a higher high and a lower low here on a daily. So it's a little bit of a first sign of bearishness is, coming in. Right here on the rejection, that's a massive excess high, but then what is it on the bottom?
Massive excess low.
So they're telling you that they want to negotiate and find a fair price.
Yeah, they're in the middle trying to see which way to go.
So, and it closed, where they opened, right? They closed below the value area low in this case. If you guys go, this is your value area low. So they're kind of rejecting this, value of the 2 days that was here. So if you go and merge this profile with previous, Now we'll have one profile that looks pretty big as soon as it happens. It takes, I guess, a long time to combine it.
I just auction in that area all week till Wednesday.
Isn't it news Wednesday?
Yeah, CPI Wednesday.
Mm-hmm.
So I would expect us to be pretty boring. Ideally, they give us this on a spike or drop or something. A 24 would be ideal. If they lose 24 here, they're in they're in a little bit of a pickle. Because losing 49, remember we talked about larger time frame scales and ranges, opens up the doors for 1500, 4900 in terms of larger picture. So
Shorty, is your TPO for ES at the 5 ticks per row?
on which period, weekly or
On a daily?
no? It's usually a 1. In the morning, it's set at 3, and then I switch it to 1.
Okay.
Yep.
He likes to watch the open M1 because you can get a more detailed picture of it, and then later on the day he puts it up to 3 or 4.
Yeah,
So
switch
over-
at noon to 3.
So overnight you have it at 1 and then you switch it to 3.
I usually keep it from RTH like open to about 1. Yeah. I don't care too much for OVN.
Okay.
When are we doing the next stock scan?
I was gonna do it today, but I might have to save it. I didn't plan on taking until 2 o'clock here. Save it for tonight. We can probably do 8:45, and it would take us probably about 20 minutes to run the stock scan.
I got a few of them.
Yeah, I have some. I have some ready here that I was gonna run. Let me see, where is it?
We could do it tonight. I know class ran for a little bit.
Shorty, I have a quick question.
Yep.
So, why wouldn't you call this like a look above and fail if it goes below that like 52 level?
52 level. Let me look. Let me turn on candles because it might not be good. Look here. Yeah, that would be ideal. That's your look. Let's look below and fail. I mean, you can call it whatever you want.
But I guess what I mean is, if it goes below there, you're looking for a bounce at 24 to get back into that upper range. Why wouldn't you?
First would be here. I would want, if they auction below 49 tomorrow, right, and they don't reclaim it, meaning they don't do this tomorrow at open. If they go lower and they make lower lows, I would look for a long opportunity here, and this becomes a trap zone for shorts, right? Because then there would be liquidity that they're grabbing off of these lows, swing lows here, and they would trap people here, and then it would be a good long here. But this would be a nice trap. This level here, I'm trying to not draw too much. The 49 level is the most important level, right? So this is where they can execute a lot of traps, and you see them doing it here. They dip below, they found some other time frame participants. So if they do this tomorrow, right, and then they reclaim it, you're not going to get this.
Right.
Right. But if they go lower, and let's say we auction open drive right out of the gates, and we were doing this and come to this zone, this is a good zone, because this can, even if you go from 36 to 50, that's a pretty good trade on the first test, because then it becomes a problem for the bulls, right? You went low, now you're expecting sellers to be defending this.
You know, that's main value area high, by the way.
I would close my longs at that level, right? I would not
makes sense.
want to participate in that fight, right? And then once they, let's say we go long here, we close here, they go here, then you're targeting somewhere around 60s.
Gotcha. Okay, makes sense. Thank you.
But yes,
So if we lose 49, most likely we're going to 24.
Do you know what zone would be on?
Sorry?
NQ?
It would be the same setup on NQ if they had, I don't know if they had single prints like we had on one of the days here. So you see the warning here, they don't have enough data. So probably have to go 5. Yeah, let's give it a second. It takes time to calculate. But yeah, usually your look aboves, look belows, and fails is where you have a massive level, and usually that's where 9 out of 10 times you're going to have poor lows and poor highs in those areas. And they usually trap people at a poor location, meaning, net long, net short. But here's your NQ. NQ is playing by the rules here on volume profile. So yeah, here's your NQ here. Man, this is massive. Holy shit. On NQ, this is pretty big. So it starts all the way at 954. And I mean, this is a really bad profile though. And this goes back all the way here. This is pretty massive. So losing 54 is not really good for NQ. It drives down all the way here. If they lose 859, they're in a little bit of a pickle then. I would say if you look at the weekly profile, it would give you a little bit better image.
If they lose 954, right?
Yeah, that would be big. That would be a big loss for them.
Yeah.
So here's your, your volume. I'm sorry, your market profile on the weekly here is going to increase probably to 12.
Thursday's NQ was disgusting when I charted it.
So here, this is a big level here. So they want to stay above here. The bulls really want to hold this 953 level. 954. They want to stay here. Otherwise, you're talking about a massive drop to potentially, I would say you would go 690-ish right here somewhere. There's a gap. There's a lot of poor structure here.
So when the split is that wide of a range, Shorty, how would you play this?
That's you know that up there where you
Would
said
you go off the 954 top?
we're entering the May value area high, so we're entering the May month, and where you said a good target is the May POC.
So the way you play this area here, does anyone have an answer for him? He said, how do I know where to, let's say, close this or go long, or how would you know?
Footprints?
You look at footprints.
Footprints is the only way. You have to find them. Where did they initiate? Where exactly did they initiate the order with aggressiveness? And that's where you would get a nice little imbalance, and that's how you would play it.
That's one more thing I was going to ask you about footprints on NQ compared to ES is I'm finding a lot, like what tick size do you use? Because if you go to like the
use 4,
use
at least
4, okay.
4, 3, 4.
Yeah, not the candles are huge.
Cool. Yeah, because it's like the orders are so weird if you're just on like the single tick.
You can't. The bar is going to be massively huge. You won't be able to.
Check for clusters. That's another way to know where the
Thank you, Shorty.
levels are.
Okay. All right, guys. Well, I'll upload the PowerPoint here, and then I'll see you guys tonight, probably 8:45, 9-ish. We'll do a real prep for tomorrow, kind of mark it, prepare it, write it out. And then you guys can listen to the tapes if you have time or not, maybe this week.
Tonight, can we do a stock scan too on some of the small caps that are in buy areas?
Yeah, I had it ready to do it now, but I'm just running out of time for today.
That's okay. Me too. I gotta go too.
Yeah.
Hey, thanks a lot, man. This was really informative.
Appreciate you.
We appreciate you, man.
Thank you.
Thanks, Shorty.
Helped a lot.
Peace out, brothers.
See you guys. Take care, guys.
See y'all tonight.
Nice to visit.
Yes, sir. Bye, girls.